Greetings to our fellow investors and wealth creators. Today, we are deep diving into the sheer momentum behind India's financial trajectory. When we talk about Dalal Street, we aren't just discussing a PIN code in South Mumbai. We are looking at the very nerve center of a nation's prosperity. The Sensex and Nifty are no longer just indices tracking a few blue-chip companies. They have become the pulse of a billion aspirations. In the current scenario, while global markets are often jittery, our domestic markets are showing incredible strength. We are witnessing a structural shift where the common man is no longer content with just fixed deposits. There is a newfound confidence in the India story, driven by robust corporate earnings and a government focus on capital expenditure. This is the era of the Indian investor, where the market's power is backed by solid fundamentals and a bullish sentiment that is here to stay. Let's understand what makes this engine rev so high.
Now, one might ask, why is there so much trust in our markets today? The credit goes to our regulator, SEBI, which has done a pucka job in ensuring transparency. We have moved leagues ahead from the scam-tainted days of the early 90s. Today, our T+1 settlement cycle is one of the fastest in the world. Even developed nations are looking at us for inspiration. This regulatory oversight ensures that the small retail investor is not taken for a ride by big operators. Whether it's the tightening of IPO norms or the mandate for clearer disclosures, the rules of the game are now more investor-friendly than ever. This governance framework acts as a safety net, encouraging even the most conservative families to start their equity journey. It's about building a clean market, where meritocracy and data-driven decisions trump inside info. This transparency is the bedrock upon which our market power is being built, ensuring that the wealth pulse remains steady and healthy.
Gone are the days when foreign portfolio investors, or FPIs, were the only ones calling the shots on our bourses. Enter the Indian retail investor, armed with the power of the SIP, or Systematic Investment Plan. Every month, a staggering 17,000 crore plus is being pumped into the markets through these SIPs. This is a massive tsunami of domestic capital that provides a cushion even when foreign funds decide to pull out. Whether it's a software engineer in Bangalore or a shopkeeper in Indore, everyone is realizing that mutual funds sahi hai. This democratization of wealth means that the market's destiny is now in the hands of the Indian public. We have seen the number of folios skyrocket, reflecting a disciplined approach to long-term wealth creation. This steady inflow has changed the market dynamics completely, making our indices far more resilient to global headwinds. It's not just an investment, it's a national movement toward financial independence.
What has truly propelled our financial inclusion is the India stack and the UPI revolution. It's simply brilliant how one can open a Demat account in minutes from their mobile phone while sitting in a local train. Fintech giants like Zerodha, Grow, and Angel One have disrupted the old brokerage models, making it almost free to invest. With over 14.2 crore Demat accounts and counting, the entry barriers have been completely smashed. The integration of UPI for seamless fund transfers has made the process as easy as buying a chai at a roadside stall. We are seeing a tech-led explosion where data is cheap and financial literacy is just a YouTube video away. This digital backbone is what allows our wealth pulse to reach the remotest corners of the country. It's a tech-first approach that has left many Western markets playing catch-up, proving that India is a pucka leader in the fintech space. To understand the market's strength, we must look at the sectors doing the heavy lifting. The BFSI, Banking, Financial Services, and Insurance sector is the undisputed heavyweight, acting as the backbone of our credit growth. Then we have our IT majors, the Vishwagurus of the digital world, bringing in precious foreign exchange. But don't overlook the manufacturing and infrastructure sectors. With the Make in India push and the PLI schemes, we are seeing a massive capex cycle. From specialty chemicals to renewable energy, Indian companies are scaling up to become global players. The China Plus One strategy, followed by global giants, is benefiting our mid-cap and small-cap companies immensely. This sectoral diversity ensures that even if one industry faces a temporary lull, others are there to pick up the slack. It's a well-oiled machine, where every part is contributing to the nation's market power, making it a robust, all-weather portfolio for the country.
One of the most heartening trends is that wealth creation is no longer restricted to South Mumbai or Gurgaon. The real Josh, or energy, is coming from Tier 2 and Tier 3 cities. We are seeing a massive surge in new investors from places like Lucknow, Jaipur, and Coimbatore. People in these towns are moving away from traditional dead investments like gold biscuits or idle land and are embracing the equity markets. They are tech-savvy, well-informed, and have high disposable income thanks to the booming local economies. This geographic diversification means that our market is not a bubble confined to the elite. It has deep roots across the length and breadth of Bharat. This is where the next leg of our growth will come from. As more and more people from the hinterlands join the financial mainstream, the wealth pulse of the nation will only get stronger and more inclusive. It's a total game changer for our economic landscape. Let's look at the global context. In a world full of geopolitical kitschy or complexity, India stands out as a beacon of stability. Global investors are looking for alternatives to China, and India is the natural choice. Our democratic values, young workforce, and stable policy environment are huge plus points. Foreign portfolio investors, after being net sellers for a bit, are returning because they simply cannot afford to ignore the Indian growth story. We are no longer just an emerging market. We are an indispensable market. Our foreign exchange reserves are robust, and our inflation management has been much better than many Western peers. This global confidence leads to more FDI and FPI inflows, which in turn fuels our market's upward trajectory. We are positioning ourselves as the world's back office, and increasingly, its factory. This international validation is the mohar, or stamp, of approval on our economic engine. As we wrap up, let's look at the big picture. We are on a clear path to becoming a $5 trillion economy, and the stock market will be a lead indicator of this achievement. This isn't just a dream, it's a target we are working towards with Pakka determination. With the Amrit call ahead of us, the next 25 years belong to India. For investors, the message is clear. Stay invested, stay disciplined, and have faith in the nation's resilience. There will be corrections, yes. Markets don't go up in a straight line, but the long-term funda is solid. We have the demographics, the technology, and the regulatory framework to sustain this wealth pulse. So whether you are a seasoned pro or just starting your journey, remember that you are part of one of the greatest economic stories in history. Let's continue to build wealth and contribute to the nation's market power. Jai Hind and happy investing.